Manager in the studio with me is Kevin Algeo, who's the MD of IG South Africa. And I suppose the thing is, IG South Africa, what about IG Africa in the future? I mean, Africa versus South Africa, that's the big question at the moment.
Yeah, so IG is a global group. We're listed on the FTSE and based in the UK. We have 20 offices around the world, and at the moment our African office is in South Africa, in Sandton. But certainly part of my objectives is to explore African opportunities, and we'll do that both online through mobile strategies, but also in physical bricks and mortar.
Yeah, of course there are limits to the African market because of the lack of liquidity in certain stock markets and also certain capital markets. So how are you going to penetrate when there's such illiquidity, which is of course what you as a company thrive on, liquidity that is?
Yeah, so we're an execution-only firm, and we provide what we think is a very good platform for people to be able to transact. So part of our strategy would be twofold. One is to build an African client base who would want to trade on our international platform and trade global markets. But the second part of the strategy is to develop an African client base who wants to trade on local markets. But we need to do that incrementally once the liquidity and exchanges are.
Is there a demand for your type of product though? I mean, people that want to trade in African markets, or is it a sort of chicken and egg situation where you say, well, the Nigerian market is going to boom because this is the biggest economy in Africa? How do you approach it? Do you say, well, we'll create the platform, or do you say the platform will create itself and therefore you come in afterwards?
Well, part of it is me engaging with regulators and platform providers and other technology companies to see what we can do to try and get things to where we want it to be. But these things generally just happen in stages. In the late 90s, online DMA trading was not possible in South Africa, and yet the JSE's done a really good job of bringing things online, and that allows providers such as ourselves to come and leverage off of that. And so we think over the next it's a long process, but several years you'll see more of that happening in, say, Kenya and Nigeria.
What is the market? What is your target market? I mean, is it the high net worth individual that wants to trade? Is it the company that needs to trade and hedge its currency exposure, its capital market exposure? What are you looking for?
So we cater to all of those, but our target client is a sophisticated, active investor and trader, and so that would be an individual who's looking to invest and trade globally, across asset class, internationally as well as locally. We also, however, do cater to institutions. We also have corporates who trade through us, and that makes up a meaningful amount of our business. But our core clients is individuals who want to take a DIY approach to their finances.
Do you worry somewhat about not South Africa? I mean, we've been worried about that for quite a while now. What about the rest of Africa now? For example, Nigeria, with the oil price going from $115 down to $60 per barrel, and therefore the engine of the continent is sort of starting to stall a bit. Do you worry a little bit about the fact that the great story that's been there for a decade now is starting to, as I said, stall a little bit?
Yes, so the growth outlook for Africa, and particularly commodity-based economies, certainly has been affected over the fall in commodity prices over the last 6 months in particular. From our perspective, though, we think that's an opportunity. With those kind of movements, we would be able to provide an opportunity for people to trade and either hedge themselves, alternatively speculate on what they think are going to happen. We don't take a view on the market, so we're actually just providing a platform for people to position themselves as they want to be.
So you don't tell people what to do, or you don't suggest to people what to do at the moment. For example, $60 per barrel is the new normal. You don't tell people that. You don't say, well, we think this is going to be here for the next 2 to 3 years, therefore you should start to look at selling call options at 70 and buying put options at 40, something like that. What do you actually do?
So we don't tell them what to do, so we're a non-advisory service, but what we do provide is what we think are very good tools for people to make their own decisions, and we're trying to empower them to take a DIY approach and for them to make that decision themselves. So the fact that oil has fallen to $60, if someone thinks that there's an opportunity for them to be on a side of a particular trade, then we want to make sure that we've got the the facility for them to do it.
What's the attitude of for example, your overseas peers? I mean, do they look at Africa and suddenly say, well, yeah, it's been a great story for a while, but now it's starting to peter out? Are they still enthusiastic about this whole story? I mean, this is an Africa summit we've got here at the Western Grand, but is it starting to get a little bit tired, a little bit long in the tooth?
No, actually. So we're predominantly based in Europe, which is where a good deal of our group revenue comes from, but we're exploring opportunities. We have offices in Australia, Singapore, Japan. We're exploring opportunities expanding into China, Malaysia, and Indonesia. We're also doing the same thing in Latin America and the same thing in Eastern Europe and Africa. And so Africa is not the only growth story that we have as a group. We've got a number of other strategies that we're trying to employ and doing it fairly well. Our geographic expansion started for our group 12 years ago, and at the moment we're quite happy with the pace at which it's going.
If you had to take one particular emerging market, I mean, Africa is one, Indonesia and the other Southeast Asian countries is another, South America is another. Would you say that Africa is at the forefront of your strategy for the future? Again, I'm just sort of trying to talk about the way that the African continent is maybe sort of casting some questions in investors' eyes.
So for my office, yes, Africa is very much part of the forefront of my growth expectations and planning, and that's what I'm at the moment investigating, and we're starting to follow a process. Group-wise, though, we think there's two fundamental things that are driving a good business case for us. One is you've got technology, which is making financial services and investing and trading more accessible to people. And two, you've got regulation that's actually pushing things to support an alternative DIY approach as opposed to an active broker agency approach. And so with regulation and technology, we're trying to empower people to make their own decisions for those who want to do it. And we think there's great opportunity in Africa, in Asia, in Latin America, in all these spaces, because even though sometimes the growth stories change, even though certainly the outlook for Africa in the last few months has, I would say, changed compared to what it was with the exuberance 2 years ago. So
That's a cyclical thing, of course, because we still are a commodity-based continent. What about the financialization of the growth story in Africa? Is Africa ready for financialization as it has, as that particular process has done so well for the so-called more developed economies? Are we ready for this?
I think that's the real exciting part of all of this, isn't it? So a lot of people compare Africa's stage of development now to what Asia was 35 years ago, and in some ways there's a model for us to look at and to go, well, how can we adapt that? In other ways, I think Africa is going to leapfrog a number of the things that Asia had to go through, and so there's real opportunity for those who are willing to do it. I mean, we operate in a niche part of the financial services industry, but within capital markets, within payments, within mobile payments, within money remittance, I think there's a lot of financialization, innovation in financialization is taking place, and the opportunities are really there for those who are prepared to take the risks and hit the market.
What are the countries you're focusing on? Obviously, we've got South Africa, Nigeria, and Egypt up north. I mean, those are the big powerhouses of the continent. Is that where you're focusing?
So we don't have a strong presence there yet. In fact, Nigeria, we don't yet have anything going on. It's all part of my investigation at the moment. It's we do get a lot of interest from our websites from those countries, and from Egypt, from Kenya, even from Mauritius, although it's a small country. And so in a sense we're able to gauge where is the interest coming from, and therefore how should we respond to that and cater to that.
Are you enthusiastic about what's going on at the moment? I mean, are you enthused by the fact that although the oil prices are halved in the last 6 months, are you still sort of buying into the Africa story?
Yeah, I definitely am, and as I say, whether the oil price doubles or halves, we just want to make sure that we're in a position to provide people with an opportunity to respond to that. Obviously, for us, in the long term, we want growing markets, growing middle class, improving discretionary spending, and so that's important. The the fact that the oil price has just halved in Nigeria, I think, is going to negatively affect that. But in the longer term, as long as that growth story and process is taking place, it's good for where we want to be.
The continent has been unbanked and now it's being rebanked. It's been uninsured and now it's being reinsured. But what about trading? I mean, trading is something completely different. It's not as if you're going to wake up in the morning in Lagos or Abuja or in Bloemfontein in South Africa and suddenly say, I need to trade the market because of this, this and this. It's a long, long process.
It is. So for those people that are taking an active interest in online trading, it certainly is a far smaller part of the financial services industry than insurance or banking. So we're catering to a very niche type of person. However, we also have cash-based investment products, and those are people who are wanting to take a longer-term view and adding to ETFs, in investing in global shares such as BP or Facebook and so on. And so we're catering to people who are taking a DIY approach, whether it's the active trader or whether it's a longer-term investor.
It's quite interesting to see that the Forbes Africa billionaires, not Forbes Africa, the Forbes billionaires survey came out 2 days ago, and the biggest loser was Mr. Dangote, who went down from 25 billion down to 14.7 billion. And is that a sort of metaphor for the continent at the moment? I keep on going on about this, but it's quite important.
Yeah, so Mr. Dangote was making his way up that list for the last few years, and it's certainly been a dramatic fall in the last year. I hate to make the comparison, but it's similar to Ike Baptista, who in the late 2000s was the Brazilian juggernaut who was targeting Carlos Slim for the richest man in the world.
Didn't he go from 30 billion to minus 1.3 billion, something like that?
Fairly quickly. Now, I'm not making any comparisons with some of our African business pioneers and so on, but I do think this is the nature of cyclical markets, of investment booms and retractions and so on. And so, and it also shows dependence on places like China and for future growth.
Kevin, thanks so much for your time this evening. That's Kevin Algeo, who is the MD of IG South Africa.